for Kitchen Design Week, a webinar series hosted by Decor Cabinets, a manufacturer of custom cabinetry for showrooms across North America. Welcome to the session, Financial Excellence for Cabinet Dealers. In this webinar, you'll learn key financial disciplines that will increase profitability in your business. Enjoy.
All right, welcome here, guys. I'm glad you joined. Hopefully you can find some of the information in this presentation informative or helpful. And while I know it's on a financial topic and dealing with some accounting stuff, maybe it's not always maybe the most interesting to some people, and some people can find it dry. I'll try to keep it light and informative and add a little bit of humor in there a little bit as well. So hopefully you guys all walk away from this with a few nuggets that you can take away to help in your businesses. So this is the presentation on financial excellence for cabinet dealers, how to build stronger, more profitable dealerships. So the agenda that we're going to go through today is basically going through a quick introduction, who I am and kind of what this is all about. We're going to go through some key financial metrics that you can help in running your business. Then we'll go through some cash flow discipline kind of techniques and how can you make sure that you can maximize your cash flow, protecting profitability. So how can you maximize your profitability when times are good, and how can you protect your profitability maybe when times aren't as good. Some operational best practices that you can kind of put into your business, how to build a resilient dealership, and finally we'll go into a bit of closing, and then we'll go from there. So who am I? I am Dave Schellenberg. I'm the Chief Financial Officer at Decor Cabinets. I've been at Decor since 2003, so as of today at least, I've been here for just over 22 years. I'm a chartered professional accountant. Previous to working at Decor here, I was at PricewaterhouseCoopers in Winnipeg during my articling period and getting my, what is at the time a CA, which is now a CPA. So a long history in the business, and have seen a few things from the cabinet manufacturing angle for sure, no question. So our books are balanced. 50% of our numbers are real and 50% are made up. So I'm hoping that's not the case in your business. I know it's not the case in ours because I do most of the books, or I am in charge of reviewing them. But yeah, you got to poke fun at accounting once in a while because yeah, it's too easy, right? Okay, so welcome on purpose. Why financial discipline matters in today's market. Well, today in 2026, we're living in some very turbulent financial times, a lot of economic instability, and we've had some of those kinds of times in the past as well. And so what are some of the disciplines, what are some of the best practices that you can do to make sure that you're able to survive and thrive through these types of times? And how do we make sure we don't take our eyes off of finances, as small problems can quickly lead into bigger ones? And what are some of the early warning signs? What are the things that we can do to try to make sure that we're making the best use of the resources that we have? So you're going to learn some of those kinds of practical tips on how to manage the finances of your business. So these are repeatable, maintainable kind of things that you can do, and how you can use finance in your business to make it better. So we all know in the cabinet dealership model, there are some issues at times. Long project lead times, like from when the customer first walks in the door until you actually get paid or get that job done and installed. It can be a long time. It can be many months for larger jobs, or just a few months maybe for a smaller job kind of thing. But we all know it takes a long time to close the cycle of a job. And added to that is the increased complexity associated with customization that a lot of our customers really want. More and more complexity with special items, and maybe these things aren't feasible, or maybe they're not profitable for us to do really, right? So that's just kind of changing the landscape of the business, where it feels like there's more and more demand for special drawings, at least from our perspective, from the manufacturer, because we're getting a lot of these coming in. And so that can add to the complexity of the business as well. And then we have with cash flow sensitivity, we all know that the cash conversion cycle can get very extended as well along with that, because the time from when you actually have to pay for your cabinets, your hardware, all that kind of stuff until you get collected in the end can get lengthened out. And so how do we have some best practices to try to reduce that timeline and make sure you can be cash flow positive and not get into an issue with your bank balance? So we'll get into some of these financial metrics. And as Homer's got on there, EBITDA, earnings before I tricked the dumb auditor. Well, that is not what it stands for, by the way. And we're not going to even talk about EBITDA. I thought it was funny. It does stand for earnings before interest, taxes, depreciation, amortization. But it just shows, yeah, sometimes as accountants, we like to use some acronyms that nobody knows what they are. But we won't go into some of those kinds of things. We'll keep it a bit more high level. So what we're going to talk about in terms of KPIs, we're going to talk about gross margin percentage, very important metric for your jobs. Net profit percentage, so again, what's the bottom line that you really have at the end of the day? The cash conversion cycle, so kind of what we're talking about, how do we convert cash and get it in the door as quickly as possible? Order backlog, so how can you maximize your order backlog, and what do you do in different situations with your order backlog? And sales productivity, How do we make sure that we are bringing in sales, and how do we measure that to know where we are best off? And then a few other little metrics that I'm going to talk about here as well. So going into the first one, gross margin percentage. So gross margin is essentially sales minus your cost of sales, right? And what are cost of sales? So cost of sales are things that are going to vary or fluctuate with that job you're selling. So for the most part, it's going to include materials, labor, and overhead. Those are the three components of cost of sales, okay? And so what are materials? Well, materials are the cabinets you buy from us. It's the countertops you're buying from someone else, the hardware you're buying from someone else, anything that you can directly associate with that job that you're buying as a material to go into the job. And then we have labor. So labor, for the most part, is going to be your installation labor. What are the things that you're doing, or what are the things that you're paying to get the cabinets installed on site at the job location? So that is the labor you're paying. The sales commissions, those kinds of things we'll talk about a bit later, but those come more in your operating expense line, which I'll talk about actually on the next slide. Then there's overhead. So anything that doesn't really fall within, again, materials or labor, but you can associate directly with the job. So the most common one, honestly, is going to be delivery. So how do you, what's the cost of delivering the cabinets to the job site where it's going to be installed? And so the target margin kind of for most cabinet dealers is going to be the 30 to 40% range. That will vary a little bit depending on the type of sales there are, like I guess between your products, between cabinets, between the countertop, those kinds of things. Overall for the job, it's probably between 30 and 40%, but then it can also vary depending on who the customer is. If it's a retail customer, if it's a builder, which obviously they're going to try to drive down their costs, so the price to you guys a lot, that might vary a little bit. The type of product you're selling, it can vary a little bit as well. But overall, obviously the goal is to try to maximize or get as much as you can in your gross margin percentage. And so there's a few ways you can look at gross margin and the cost associated with that to try to improve your gross margin. So one is, okay, make sure you don't underestimate your installation time. I know you guys have probably all been through this before, or maybe you underestimate that and then your costs are coming in higher relative to what you built in to your selling price for that. So make sure you don't do that as much as possible. Build in some kind of buffer for your installation costs. Watch discounts. I know a lot of the builders are probably pushing for discounts, those kinds of things, which you kind of have to hold the line a little bit on that. With retail, it might be a little bit easier to avoid those kinds of things, but depending on who the customer is, that can really cut into margins very, very quickly if you get into too much deep discounting. And then there's things like delivery costs. So the labor, the fuel, vehicle costs, all those kinds of things. Watch out for that. I mean, again, if you're going to have to deliver well outside your area, that's going to cut into margins quite a bit because you're paying for the people to drive, you're paying for the extra fuel, all those kinds of things. So watch out for those kind of common margin leaks that can really affect what your gross margin ends up looking like. What does margin discipline look like? It looks like careful installation practices. Make sure you're doing detailed job costing, charging for delivery outside of your area, those kinds of things. So make sure you're really tight on those kinds of things to try to maximize your margin. So then looking at the next level down, kind of thinking about it as an income statement kind of approach. So the next level down is then looking at your net profit. So now we've had selling price minus our cost of sales, and then all the other costs that aren't included in cost of sales are going to go through operating expense, really, right? So sales minus your cost of sales minus your operating expense gives you your net profit. And then taking that net profit divided by your sales, that's your net sales percent. And that's what we're trying to maximize. That's what we're trying to, get higher, obviously, so we have more bottom line, more to go home with at the end of the day for you guys. And so what are some common components of operating expense? They're going to be things like, staff that aren't associated with the installation. So it could be sales staff, administrative staff, those kinds of things, as well as their benefits and the costs associated with that. It'll be things like insurance. It'll be rent if you're renting, or if you own the premises, it'll be things like property tax. It'll be utilities, maintenance, marketing, office supplies, all this other stuff that you can't associate directly with that job that you're selling. So those all have to come off before you end up with your net profit. And then there's tax obviously within there as well. So what are some of the things that you can do to reduce your operating expense? And really, it's not that different than what you could even look at as your home operating expenses, kind of like your budget that you might have at home. Or for us as a cabinet manufacturer as well, we have a budget as well. And so how do we track what our expenses are this year compared to budget or compared to the prior year? And look at the things that are they're up a little bit. Well, why are they increasing? Is there a valid reason why they are? Is there something you can do to mitigate that, to reduce those expenses, things like that? So that's one quick way to kind of get a a feel for what are some of the expenses that you can look at to reduce. Also, one thing that I always kind of look at, again, at home, same thing I do in the business, is what are some of the recurring expenses that I'm signed up for. So even some of the subscriptions. So do you have like a Netflix and a Disney and an Amazon Prime and a whatever? All these, and then you have your, like for viewing, for streaming, and then you've got like cell phone and all these other things that just automatically come off every month. They're a cost to you, really, right? Do you really need all those? How often do you look at some of those things? How often do you evaluate them? I mean, they're obviously a good revenue stream for the suppliers that are supplying you with these products, but do you really need all that? Because the world has gone much more to subscription rather than buy and own. They like having that recurring revenue stream. But then you got to question, does it still make sense for you as a business or at home to really have those things? Because they can over time really add up and build up and kind of affect your profitability, no question. So I'd encourage you kind of review those recurring expenses that you have every month, and also look at it in light of the budget and in light of the prior year to kind of know how you're trending over time. Other things that you should watch out for are things like overtime, discretionary expenses. So what are you spending on meals and entertainment or on travel or on stuff like that? Those are things, again, that can easily creep in, that can kind of start to erode your margins. So look at those types of things. Really any kind of thing that is wasteful or anything that you could say doesn't really directly contribute to an increase of a bottom line, like increased sales or increased activity in your showroom. So those kinds of things. And even on that vein as well, looking at your showroom utilization. So are there parts of your showroom that are not generating sales, are not really being a positive for you? And we'll talk about this a little bit later as well, but you can look at your displays or what you have out there and look at it from a standpoint of how much did you sell of that product line for how much it occupies of your showroom. So are you using your showroom, are you maximizing its value? And I know we have another presentation that just happened that you guys could watch as well that kind of looks at that or talks about how can you maximize the use of your showroom. So I'd encourage you to look at those types of things as well. Next is our cash conversion cycle. So in the end, this is days from cash out to cash in. And obviously the idea or what you want to do is try to minimize that. Ideally, if you can, you want to, well, obviously you want to get in cash quickly, but ideally you actually want cash in before cash out if at all possible. And I know sometimes that's a bit tricky, especially when you're dealing with builders or different kind of markets like that, where they all want to go on terms and maybe they're pushing you on terms, those kinds of things. You know, eventually you got to hold the line on some of that kind of stuff. And not allow it to get pushed out too far, because you know they're in a cash crunch too, really, right? Where they've got a job, they've got something going on, where before they can start the next one, they need to get paid on the previous one, and they can get into a cash crunch there as well. So that can start to create vulnerabilities in your business if you let that get pushed out too far. So overall, we want to keep that cash cycle from when cash goes out to when it comes in as tight as possible. Just to give you an idea, or think about it from the manufacturer's perspective, from Decor for us. So we're buying our materials obviously well in advance of when we manufacture. So there's a big time there, a number of weeks before we actually manufacture. And then there's a time from when we are manufacturing, and then there's a time when we're shipping to you, and then we have our terms as well. So for me as a CFO of Decor, I'm looking at all these different times to say, okay, how can I keep those shorter to try to keep that cash flow positive, really, right? And you can do that yourself from a cabinet dealership perspective as well. And we'll talk a bit about more of that a little bit later as well. Next one I want to encourage you to look at is your backlog quality. So a healthy backlog provides a buffer for slower times, obviously, right? When sales are strong, well, you know what? If you got this big backlog, maybe you can be a little bit more aggressive with your pricing because you've got this big backlog available, this pipeline of jobs waiting to come in for you to work on, and you guys are busy. Well, that gives you some opportunity to kind of not be pick and choosy, but you know, with pricing, you don't have to be as flexible necessarily if you're getting pushed around a lot on that. Whereas when times are really, really slow, when there's economic instability, these kinds of things, well, you know what? Maybe you do have to sacrifice a little bit on that. I'm not a fan of doing deep discounting or anything like that, but at the same time, if there isn't a lot of sales out there, then maybe you have to make it a bit more open to being somewhat flexible in that area, because, you know, we talked about how you're going to have all these expenses like rent and utilities and all these things. Well, you're paying those no matter if your people are busy or not, really, right? So to a certain point, you have to maybe accept some lower profitability or margin on those jobs to make sure that your people are still busy, and you can pay some of those fixed expenses. So there's some flexibility a little bit that you need to have within there. But you know what? If you have a healthy backlog, if you can build that up over time, then that can prevent a lot of that sacrifice that you might have to make on margins. So however you can do that obviously is a goal that you guys have, which I know you're very aware of. And so are jobs approved, profitable, collectible? Not every job is a good job, right? Like if you sell to somebody, but there's a chance you're not going to get paid, well, obviously that's not great, because how many jobs do you have to sell for what it costs you to get a job that isn't paid, right? That's many, many jobs. There's a multiplier, which we could talk about on a separate session on how to actually calculate that. Yeah, so I'd encourage you to look at your order backlog and how can you really maximize that, both when times are good to try to say get as much profitable jobs in there as you can, as well as when times are slow to make sure you have work that you can work on. And as well, once you have that backlog, then you can start to kind of forecast out when that cash is going to come in, right? Because then you can say, okay, well, based on this schedule, not that you always know when a customer is going to sign off on a job or anything like that, but somewhere you can get a reasonable estimate. So you have an idea when you're going to get that deposit, when you're going to get the installation done. So then you can model out from a cash flow perspective when you expect cash to come in, and then you can kind of plan how that cash is going to go out to try to maximize that cycle, that cash flow cycle we talked about. So a few quick sales productivity metrics, kind of like what we were talking about before as far as how do you maximize the sales for different areas of your showroom. Well, same thing for your designers, of course, as well. So looking at sales or margins per designer is obviously very, very important. You want to make sure that they are generating a good margin. And I know a lot of our dealers pay commission based on a percentage margin that are being returned and all those things, but you want those margins to be high wherever possible. And I know I'm preaching to the choir when I say that, and that's easier said than done. But at the same time, whatever little those tips and tricks you can use to try to maximize margin, obviously goes a long ways. As well as things like close rate, quote to order ratios, these kinds of things. I know you don't want to spend a lot of time on things that end up resulting in a sale. So I know I've got experience in my own life where my wife is in a similar kind of business whereby which she'll have customers walk in the door, call her on the phone kind of thing. And what is the close rate essentially, really, right? You could spend a lot of time doing research, helping customers that might not end up in a sale at all. And that makes it really, really tough. And that's a tough industry to be in because you feel like you're wasting time on some of those kinds of things. And we'll talk about a few things that we can do to help with that in a slide or two here as well. So we'll go over some other metrics that you might find interesting as well. And I know we're going to talk about fixed versus variable expenses, which might be more of an accounting terminology, but it's something to be aware of in your business. So what are the fixed expenses that you have, such as rent, utilities, insurance? You know, no matter how much you sell, again, these expenses are going to be there. So I just want you to be cognizant of those kinds of things because they can, again, erode your profitability fairly quickly. And they don't really have anything to do with how much you're selling, essentially. It's just a part of doing business somewhat, really, right? So be aware of your fixed expenses and then those that vary, that do fluctuate with how much you sell and how you can try to reduce both, because they do require a little bit of a different mindset to look at. And just by the way as well, with those, once you have kind of fixed versus variable expenses information, then you can start to calculate things like break-even margins, those kinds of things. So like how much sales do you have to have in order to break even as a company? And then anything above that essentially is what's going to add to profitability. So there are some metrics like that you can do. And honestly, I could do another session on break even, or you can even just Google it and you can kind of see some metrics on how to actually calculate that yourself. But there are some very useful metrics that you can use in that regard. And so now we're going to talk about cash flow discipline. And so, Mr. Bean, the look you get on your face when everything balances and all your financial statements when they all balance. So essentially, Mr. Bean's obviously pretty classic. He kind of looks like an accountant maybe, or how people view an accountant at times. So I thought it was kind of appropriate joke. But so cash discipline, cash is king. Profit doesn't matter if cash isn't available. I know there's lots of companies that over the years, they might have shown profitability, but if they don't have cash, you know what? It doesn't really matter. You got to still be able to pay your vendors. You got to still be able to pay your employees. You still got to do things. You got to monitor cash flow closely, and especially when you're in a higher growth phase, because often you're putting out money before you're going to collect it, and there's that lag time. Like you think about it again, as a cabinet manufacturer, if we're in full-on growth mode, we're spending a lot on materials to bring up our raw material inventory, but we're not going to be paid for it for potentially a few months, essentially, right? So you got to make sure you have a cash reserve to kind of get you through those times. So cash flow is a major, major concern for companies as well as manufacturers, for dealerships, really for everybody. And it is more of a concern when times are a bit tight and there's economic instability. When times are good, then I kind of focus more on the profit side of things, the bottom line of the business. But when things do get tight, then you kind of lean a little bit more towards the cash. And that's just kind of the nature of the business and how business works. Don't take your eye off it is what I would encourage you to do. Make sure you're getting enough deposits. Make sure you're in a good cash position. Make sure you're looking at your online bank statements. Make sure you're connecting with your bankers all the time to make sure what they're thinking of you and your business. Have some communication on that, and I'll talk a little bit more about that in a little bit. But dealers can at times struggle with cash flow because when you get into that busy mode, that busy season, it's easy to get caught up and we're pounding out sales like we're going. That's great. That is very good. But you also got to make sure you're in a good cash position, and you can kind of forecast that cash position to make sure you're able to meet your commitments to your suppliers, to your employees, to everybody like that. Because last thing you want is not have cash for that. And follow up on past due receivables. I mean, this kind of goes without saying, but again, that's another thing. Do not take your eye off of that. The longer receivables are out past due, the harder and harder they are going to be collectible. And there's lots of statistics out there that would reflect that as well. So make sure you are following up on those past due receivables for sure. So in that light, deposits. Well, I think there's an industry standard that says essentially try to get 50% on deposit. So I would encourage you to do that. And not only that, but then when you have that deposit, it's easy to say, oh, I got this cash now, almost like burning a hole in your pocket. Well, maybe not that, but make sure you keep that cash to pay those vendors associated with that. You don't want to get into the situation where you're robbing from Peter to pay Paul, as the saying goes, essentially, where you're taking that deposit from this future customer to pay off your last job. That can start to get you into this crazy cycle where it's going to be a real cash drain over time, and it's hard to get out of that. So I'd encourage you to kind of earmark that cash for what that job essentially is. Otherwise, it's tough. Like I said, then it can devolve very quickly where you don't have cash to meet your commitments down the line. Like I said, deposits, it can reduce the financial strain, and you want to align that cash inflow with that outflow. So again, if you're having to do deposits on your jobs to the manufacturer, such as us or whoever it might be, or setting it aside so that when you do have that bill to pay, that you know that cash is available. So what are suggested terms? I mean, you guys will know this obviously very well, but 50% at order. Some people do 40% at delivery, 10% on completion, those kinds of things. I would encourage as much as possible to go 50 at order, 50 at delivery. And we all know that last 10% can be very difficult to get. I mean, it's only 10%, but it probably is the hardest to collect, right? Because there's always maybe an issue. There's some warranty, there's some whatever it might be out there. I don't know, that they're waiting for a part, and that 10% can be difficult to collect. So if you can get that 50% on delivery, that's obviously the optimum to try to get into that situation. And avoid free financing. So risks of letting customers pay after installation, we just talked about that. There is a risk that that's just going to get pushed out because they probably won't want to pay that until final sign off, and it can drag out a little bit potentially at times. So you don't want to get to that situation because that can erode profitability fairly quickly, because that's going to take you a fair bit of time. And like I said, then it's taking someone to try to collect it, follow up all the time. It's not ideal. So enforce your terms as much as you possibly can. And then, avoid having to chase that AR for sure. And then managing some supplier terms. So I don't know, maybe I shouldn't put this on here because we are the supplier for you guys, but align your customer deposits to payments to your vendors, as I talked about kind of before. So again, try to take that money that was taken in on a deposit, or even that final payment you got from your customer, and use that to pay the manufacturer, the supplier that you have. Like I said, otherwise, if you don't do that and you get into robbing from Peter to pay Paul, that's just a cycle that goes down, and it's tough to get out of at times. So I would encourage you not to do that. I would encourage you, this is my little plug, I guess, for Decor, but I would encourage you to take advantage of programs that are offered by manufacturers. Again, this is a very solid best practice. Take advantage of early pay discounts from people like us or Decor companies like Decor Cabinets. If you pay within 15 days, you're going to get 2% off, right? 2%, that adds up over time. Not only that, you pay within terms, so typically 30 days. That can yield another 2% that will put into a dealer partnership program, which you can use to update your displays later on, right? So very good practices to get into. 4%, let's say you're selling $1 million a year or something like that. Hey, it's 40 grand. That adds up pretty quick. That's a lot of money. So try to get into that habit if at all possible. I know you guys sometimes are in a cash crunch. Try to use some of the tips you talked about earlier to get out of that, so that you can pay within terms, and even better within discount terms, to try to get, again, maximize your cash flow 4% of sales going to the bottom line is not a small amount. So that can add up quite considerably. And then on that same vein, using things like electronic payments and try to make sure that you're getting it within the 15 days, getting your payment in within those 30 days to do it. And so not only is it doing that and helping you make sure you get those discounts, but it actually reduces costs for you guys as well. There are a lot of costs actually associated with putting a stamp on the mail. I mean, mail costs are going up because not many people are using it anymore, right? So the cost of mail is increasing. Running to the post office, that costs something. Buying the blank checks costs something. Getting somebody to sit there and sign all the checks costs something. At Decor, we try to go paperless as much as possible. We want to pay all of our vendors electronically. The only ones we don't are as if they don't have a system or they don't give us their banking information to do so. Otherwise, when we make payments, it's all a big batch that we're paying like 30, 40, 50 vendors at a time electronically. We can review the file all in one shot, press the button to authorize it, have dual authentication on it to make sure it's properly authorized before it goes out. No chance of that thing getting lost in the mail, no chance of check fraud or anything like that. It's quick, it's easy, it's cheap, very inexpensive, and basically every bank offers it. So I would encourage you, if you're not doing electronic banking today, to take advantage of that. There's nothing but benefits associated with doing that. So I encourage you to check into that. Okay, getting into protecting profitability. So I got an accountant joke here with Santa. You gave away 60 billion toys and didn't get one receipt. His auditor or accountant kind of complaining. So yeah, we have these people in our business as well, chasing down people to get their receipts in, those kinds of things. So it probably applies everywhere, but maybe not to Santa. Okay, job costing accuracy. So we talked earlier about what's included in cost of sales and job costing. So just to remember, it's materials, labor, overhead are the three big ones, right? So cabinets, hardware, freight, labor, service, all those things are kind of going into it. I would encourage you, do not underestimate install labor. I mean, you guys have probably all been there before, where you kind of assumed a certain amount of labor for installation, and then you have to back multiple times, or whatever it is. It takes longer than you're expecting, whatever. Trades aren't always on time, those kinds of things. So yeah, build in some buffer. I'm preaching to the choir, I'm sure, but make sure you build in some buffer on your install so that you make sure you don't lose out on that. Develop processes to reduce the chance of that, obviously, and use a job costing checklist. So have your jobs, have all the items all the costs associated with that job. Make sure you go through it on every single job. Make sure you got everything covered for sure. So just some quick, easy best practices that I'm sure you guys are doing already, but just maybe give it a second thought to make sure that you have everything on there that you need. Pricing discipline. Avoid discounting to win jobs. We talked about this before, especially when times are good. I get it. When times are tough, you need to get the job to keep the lights on, kind of things like that potentially at times. But it can get into something where maybe customers are expecting it over time, which then they'll just wait, and you don't want to get into that kind of situation, right? So a good pricing discipline obviously can help with the bottom line. And value-based selling. Again, this is a huge thing. I'm sure you guys have trained your dealers and help doing this. We are not the Walmarts of the world. We are not looking at selling at the lowest price. That's a race to the bottom very quick. And so how do you provide value to your customer? How do you kind of take what they're telling you when they walk in the door saying this is what they're looking for and achieve that dream, but maybe even helping them know or think about things they're not even thinking about, right? How do you upsell certain items? How do you give them options that maybe, you know what, have you thought about this? Have you thought about that? Different options that can kind of enhance their lives and provide that value to them. And at the same time, obviously, then there's an extra sale associated with that. So how do you upsell on some of those items depending on what it is? But I encourage you to train your dealers on how to do some of those if you haven't done that already. So yeah, training goes a long ways and experience goes a long ways in doing some of those kinds of things. How do you qualify prospective customers? I kind of alluded to this a little bit earlier, but at the same time, when people walk in the door, how do you know, are they tire kickers or are they actually looking and can actually make a decision on buying a new kitchen or vanity or whatever it might be? So there are certain tips and tricks that you guys can use, right? Do they know their budget? Do they know their timelines when they're putting this in? Do they have some of that information? Do they have authority to make this kind of a decision? Do they know what kind of products they're looking for? Have they done some research online and now they're coming in? I mean, with all the online resources available, maybe they've done their due diligence and are coming in. So how much information do they have? Kind of tells you a little bit on how they put in their homework and are they ready to pull the trigger on this, or is this just a tire kicker, just someone looking to waste some time or whatever, really, right? Because that does not help you guys at all. You don't want your time to be wasted. So how do you qualify those dealers and what are some of the things to look for? And yeah, those are kind of some of the techniques that I would use to kind of look to say, is this a serious buyer coming in? And managing revisions and change orders. Well, obviously these things take extra time that do not add to your bottom line or anything like that, right? They just take time. So do you charge for redesigns? Do you allow revisions? Maybe up to 2 revisions before then you start to charge for them. If you just leave it open-ended, again, that can go on forever with the revisions, as we all know, and just take time and start to erode your margin or sales per employee, those kinds of things. So make sure you kind of try to keep revisions to a minimum, or else actually start putting in some kind of a change fees associated with doing some of those kinds of revisions. Maybe even request a retainer that you could use against something like that. Also plan for a certain number of site visits above which then you could maybe have to charge for something in addition to what that is. Again, this is all within context of how much margin you have available for that deal, or how big and complex the job is, because bigger and complex ones obviously going to take more revisions. But things to keep in mind really, right? To try to make sure you're getting your margin that you need for you as a business. Building a resilient dealership. So what do you mean I can't claim chocolate as a business expense? That would be nice. I know I always have a little bit of dark chocolate after lunch or after supper kind of thing. I like that. So yeah, I wouldn't mind being able to write some of that off. But unfortunately, that's not how it works. So what are some of the things to build that resilient dealership? Well, one is aim for 1 to 2 months of operating expense as a cash reserve, essentially. We talked about cash a lot before, right? Just like you have at home, you want to have some savings account. You don't want to be running on zero or just living paycheck to paycheck if you can avoid it. You want to have some kind of a cash reserve as like a rainy day fund or whatever it might be. So you want to be able to pay operating expenses for, let's say, 1 to 2 months, ideally maybe even a little bit more. But otherwise you're going to run into a situation where maybe times aren't very good and you don't have the cash, and hey, you got to make payroll still. So what are you going to do? Are you going to ask your employees to push it out by a week or 2? Well, that starts to erode trust from your employees and from your vendors as well, right? So try to keep a bit of a cash reserve, at least 1 to 2 months is what I would suggest. It reduces the stress, increases your stability for sure, and makes your relationships with your employees and with your vendors a lot easier and builds that trust. Diversify revenue streams. How specialized are you? Do you sell just one product line? You sell just to one type of customer? That can get fairly dependent on that particular industry or nature of business, really, right, of sales channel. So I encourage you to try to think a little bit broader than that. Have a few different ones, like sell to builders at times. I know that they're not sometimes the easiest to deal with at times, but it diversifies you a little way. Sell to a retail customer, sell to renovators, sell to interior designers. Diversify your product offering a little bit. Like at Decor, I know we tried to do that as well, really, right? We have our Zona Vita, like our pre-finished line, as well as we have our finished line, like the stain and paint. So typically what we find when times get a little bit tougher, people's price points, what they're willing to spend starts to come down a little bit. That's maybe where our Zona Vita line kind of helps out a little bit, where it is a lower price point, but still has lots of things to offer. And that allows you to still get some of the sale potentially, or offer to a different market that way, a different consumer, different buyers looking for that type of thing. And that can help you out. So if you get too locked into a very narrow sales channel, narrow product line, that can start to be a little bit difficult and puts you dependent on that, which again, the market fluctuates. So have some variability, have some diversification within that. Know your numbers. So again, as the accountant, as the math guy, whatever, obviously I would say this, but financial health, know how you're trending. Again, when times are good, it's easy to take your eye off the ball. It's easy not to look at cash flow, look at some of those kinds of things, but know your numbers. So, I mean, we didn't talk a lot about it today, but like debt to equity, return on investment, some of those kinds of things, they are important metrics that you can use to monitor the health of your business and how you're doing. Look at these things over time. Are you trending better? Are you trending worse? You can easily do some benchmark studies through Google to find what's typical, what you should expect for your business. Obviously, the more money you put in, you want to expect that's going to generate a return, right? So if you have to inject some money into your business, how is that affecting your return on investment? Because you want to you're making sure that you're maximizing that return. Otherwise, you could have invested it somewhere else to make income off it, right? So look at some of these metrics over time, monitor them. They'll tell you pretty quickly what the health of your business really is. And in that light as well, make sure, as I alluded to before, make sure you're communicating with your bankers. I mean, they've got a lot of power, obviously, over you. And so at the same time, you want to make sure you're communicating, you're proactive with them. Be proactive with communication. If things are difficult, you're going through a slow time, Don't wait for them to call you, okay? If you take one thing away from this whole thing, call them first. Be upfront with them, tell them what's going on. That'll buy you a ton of credibility. Even if it doesn't change the situation you're in, as far as if it's a slow time and not a tough time for you right now, but tell them about it. Tell them what your plans are, how you're going to come out of it, what you're forecasting, looking in the future. If nothing else, it'll show them that you have a business acumen. You're thinking ahead on these things. You're not just being reactive to what comes across your desk. So that's a big deal as well. If you have bank covenants on the debt that you do have, if you have debt, I would encourage you to track those yourselves. Don't even let the bank be the one to tell you, oh, you're offside on your covenant or not. You should be tracking these yourselves. And again, looking at how is that trending over time. Is it going positive? Is it getting close to you kind of violating one of your covenants? Things like that. And again, be proactive with communication with your banker. You know what? If you're proactive with communication, they'll often give you a lot of grace. If you're not proactive and they have to be the ones to get on the phone and tell you, hey, you violated a covenant, they're not going to be nearly as friendly. So be proactive with that, I would encourage you. And invest in training. So sales training, design accuracy training, installation quality. All of these things can help you have a better product in the end. First of all, it can bring the sales in better, obviously, getting some good sales tools to your dealers, but then as well, the overall customer experience is going to be more positive. So you're going to get better word of mouth. Because we all know we can provide the products, and the same product that we can provide as a vendor, you know what, can be installed maybe slightly differently. The installation quality can make a big difference to how the end product looks and the customer experience, because they'll often maybe talk to the installer and have some experience with them as well. Just like for us, you don't often see, well, you've probably never seen me before, but at the same time, you'll have seen our truck drivers, right? So that's a point of contact that can make a big difference in the customer experience and in that relationship. So your installer and their attitude and their training and how well they do their job can make a big difference for you there as well. And know your products, obviously. So know your product lines from Decor. Utilize the training that we have available through our university, through these types of training things. Utilize the resources you have to try to bring up your product knowledge so that you can be a benefit to your customer. And you can also get training through things like the NKBA. There's lots of training available to help you guys as well. So use the resources that you have to try to help yourselves and your dealers, and your designers become better at their job, your installers become better at their job, everybody really, right? So invest in training. Empowerment, give staff the tools and training like we just talked about that they need to empower them. So again, looking back at what we talked about in the KPIs on waste, there's something called lean office. Well, there's lean manufacturing, which we use at Decor. Well, you can use lean office. There's techniques that you can use within your office to try to bring down some of the waste and improve your bottom line. So if you haven't looked up some of those, you know what, might be a good time to look at some of those to say, how can I improve my bottom line by reducing expenses and maximizing the resources that I have? So look at some lean training tools. Use different processes like business cases. Like if you're thinking about opening a new showroom, you're thinking about adding a new display from a new manufacturer, thinking of it as a business case. Think about it as, what's the problem you're trying to solve? What are your options? Do an analysis on each of those options. It doesn't have to be a huge, crazy, in-depth analysis. We call it Fermi math kind of thing. Even just kind of using common sense or stuff you can look up on Google, right? To try to give you some idea, some quantification. Don't just throw your hands up saying I can't quantify it. Try to do the best you can to come up with some kind of quantification to say, is this the right decision? Or how do I evaluate these alternatives to try to make the best decision for me and for my business? So I'd encourage you to think about business cases to try to make good decisions in your dealership and try to develop ownership thinking within your businesses. So you've got the owner who's obviously looking at the bottom line, and you've got your employees within the business. You've got designers, you've got admin staff, you've got installers, you've got all these people. How do you get them to think like owners? You want them to spend your money the way they would spend their own money, right? And so how do you actually do that? There are either incentive plans you could put out there that, you know what, if you're going to spend this money, then it's going to reduce your bonus or something like that if you have a bonus program. But try to develop that ownership thinking within your business. That means training them with the business acumen at times to do business cases, to do lean office, to do some of these kinds of things. That will help you and your bottom line in the end. So I try to encourage you to get your people to think like owners and how you can maybe incentivize them to do so, or at least give them the training to do so. So in closing, I've got this one at the end here. For years, we've been playing by old rules. The results have been dismal. It's time for a bold new direction. 1 + 1 does not equal 11, 2 + 2 does not equal 22. That I would call creative accounting. Obviously, you do not want to have accountants that think that way. it's good to do creative accounting, think outside the box, don't just get locked in, but there are limits obviously as well. We have to live in the world of reality. And yeah, I encourage you to make sure you do have someone good doing your books. That can make a big difference as well. And someone that can be a good advisor to you in doing your books, because they can help you with some of the stuff like we've talked about today to run your business more effectively, have good customer experience, and really try to maximize your bottom line. Thank you so much for everything. Here's some key takeaways. Track your KPIs monthly. Protect your margins. Try to maximize your margins, especially when times are good. Enforce 50% deposits, so have good cash flow discipline. Standardize your processes. Use best operating practices. Yeah, and build that cash reserve and make sure your bank kind of is informed of where you're at. Important things that you want to make sure that you're doing as a business. So hopefully there's something within here you've been able to take away, a nugget or two that could be of benefit to you. I'd be curious to hear back from you guys, to hear if there's anything of value in what we've talked about today, and any ideas that you have that are financial in nature or otherwise that you'd like to hear more about. So thank you so much for your time today, and wishing you guys all the success in your business. And we value you as customers, and thank you so much for being a part of the Decor family.
We hope you found this session helpful for your business. Join us for all the Kitchen Design Week webinars, which will include topics on marketing, profitability, and sales. If you enjoyed this webinar series, the Decor Cabinets Academy is a great next step for professional development.